Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Whitton and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello. Good morning, everyone. A bit late to the party today. Better late than never, they say. But hope you're awesome and well. Good to see a few of you on already. I'll do the quick intros while things are warming up anyway. Give us a shout out in the chat if you're there. Maybe you might be new to the show, Wealth Coffee Chats. We've been doing this for a little while now. And over the last few years, got to know a few of you. So great to have you here today. And if you're returning, fantastic. But if you're new, well, hello. Jason Whitton's my name. Good to have you here. Let us know where you might be in this wonderful country. Dialing in from. The world of the internet is pretty good these days. You can be anywhere, tuning in for some education, some pontifications. As we're going along. Hey, good morning, Bunty. There you go. Morning, Rahman. Yeah, Facebook's not working. Yeah, that's a bit weird, isn't it? I did notice that not as many people jumping on first thing this morning. Facebook's playing up, so we might need to get on to that. But anyway, we shall get on moving forward. Justin's in. Maybe something's going on. Anyway. We shall soldier on with this morning's conversation, folks. Good to see you here. I thought today we might talk about a little bit of something that's going on that I'm seeing out there as in the stats in the world of statistics is all of the charts, the ones we're looking at for growth, future growth, up and to the right. What does that mean as a property investor team? Well, it means that there's a lot of interesting things to come. And I want to talk about that today and maybe, get your feedback on why. Why aren't we all out there buying properties like drunken sailors right now when the future looks so bright? Might be interesting to talk about that. So let's dive into that today as we go along and talk about what I see, what is happening out there in the world of property investing. Well, let's have a bit of a look at the charts when it comes to something pretty straightforward. I love a bit of data. You guys have seen that over the time. And myself, Sam, and the team, we love to aggregate. We love to grab information from multiple sources and have a look at what is what's going on right now. What does that mean for the future? And, what can we do about it as property investors? What's the future look like? Where are we going? What is over the horizon? Because most of us want to know the direction we're headed. We buy our properties, buy well, never sell. You're building a portfolio. The point is to own good properties for a long time, but what does the future hold? Now, no one's got a crystal ball, but we love gathering good information from decent places. The source here is Oxford Economics and Price Finder. And these data providers and economists have some great information that we love to, use and have a bit of a look at. So we're going to go through some charts today. So stick with me because this stuff's going to be, I think it's interesting. Anyway, have a look at the trajectory that, has been the last few years. Well, let's call it 10 years. A slow and up and to the right trajectory until we hit the world of COVID, right? COVID gave us quite a steep increase in our property values, which, unless you've been living under a rock, you may have noticed, right? But the more important thing right now is the trajectory, the forecast from every economist, every property person in Australia. What is going on? There is a upwards trajectory and a very positive conversation going on about property prices and property values. But it's interesting, right? It's interesting when we think about what's going on. Why aren't we all out there buying properties like drunken sailors when we know that all of the indicators, all of the data from us as professional property investors can see is looking very positive. What's going on, right? So let's have a conversation about that. Let's talk through that today. Big shout out to a few of you here. Kevin, good morning to you. Luke's in the house as well. Morning, Luke. And Roman, question is a townhouse considered to be a house or a unit when it comes to data? That is a good question, Roman. I've never considered that on its own. I believe it's added to the units, Roman, but I'm going to ask. I'm going to ask that. Anyway, there you go. There's a question. Yeah, unit, townhouse, villa. Okay, there you go. But anyway, let's crack on with the conversation today. Right. What does the future hold? Looks like it's pretty good. Let's have a look at Sydney. Well, the forecast into Sydney looking very positive, looking great. We want to get a piece of that. What does Melbourne hold? Well, Melbourne holds a similar thing, but you can see here right now we're experiencing in Melbourne a flat period. Now, for you and me, if we go back here and have a look at, Sydney, not so flat. Melbourne has got a flat period and then growing a bit later in the cycle. What does that provide for us as property investors? The Melbourne market slowing down. Its political situation is rubbish. Yeah, their politicians are useless. The largest lockdown in the world. I don't have to repeat what went on down there. Ask a Melbourneite. So the Melbourne marketplace is getting a bit of a kicking when it comes to its confidence, not the underlying value and data, folks. Okay, not the underlying value and data, but the confidence of that marketplace. And now, ladies and gents, Melbourne is the cheapest place to buy. Oh, well, it's the cheapest place in Australia to rent, by the way. What does that mean for the future? Have a little think about that. What does that mean? It's one of the cheapest places to buy in Australia. One of the cheapest places to rent in Australia when it comes to our capital cities. Folks, tell me in the chat, what do you think that means? What does that mean for Melbourne? I know what it means. I've seen it many times. This is not my first rodeo, 25 years in doing this. A major capital city like Melbourne won't be kept down for long. Anyway, there you go. So Melbourne, not going to grow as in the shorter period, but certainly grow over the long term. Brisbane, all the way to the Olympics, going completely ballistic. Perth, having a good run. Canberra, again, Canberra a little bit flatter, but still good runner upwards. Adelaide, going to have a great run. This is interesting. Hobart had a down and flat. Darwin had a bit of a down as well, but is kicking on. I've never invested in Hobart and Darwin. I consider them too small when I can purchase, same value properties in cities like Brisbane, Sydney, and Melbourne, Canberra and Perth. But, there you go. If you're investing in those towns, a little bit of data there. Okay. Let's have a look at the rents. All right. Well, we've got the property values going up. Let's have what's going on with the rents. Well, the forecast is up and away. Have a look at that over COVID. Over a 10-year period, folks, the rent went from, 350 to 450, right? Slow increments over time. And if you go back and have a look at the interest rates and stuff over those period of time, then, that you can see that interest rates sort of came down and rents went up a bit slow. But anyway, have a look at this. The increase in rents has been significant, almost doubling in value. The double in value from 2020, right? Check that out, 2020 to the forecast, let's say, call it 2030, all right? Now, that's pretty significant, team. That's pretty significant. Now, keep this in mind. This is the forecast from the black line, forward and back. What does it look like for you and your properties that you own? What does it look like for the possible properties that you can invest in and your strategy right now, which is pretty interesting. So the forecast is combined values going up. Not every property goes up in value, by the way, folks. We know this. We've had these conversations before. If you buy a rubbish property in the wrong spot, in the wrong way, badly designed, it's going to languish compared to good quality, flight to quality properties, etc. But this is the general market conversation. But let's have a look at the rents in each of the cities. Rent in Sydney. You can see the little dip here in COVID for many properties. Again, Melbourne, dip in rents, but up and away. Brisbane pretty well did nothing because everyone moved to the southeast Queensland, which was interesting, right? Adelaide up and to the right. Perth, absolutely gangbusters, all right, when it came to the rent direction. And Canberra, again, nice and steady with Canberra. Hobart, not too bad, etc. Darwin, again. Now, what does all that mean for all of us as investors? Well, our property prices are forecast to go up. Our rents are forecast to go up, but not as fast. So tell me, folks, there's a few of you on right now. Why aren't we all out there? This data is corroborated. I think that's the right word, corroborated, cross-checked and cross-referenced with lots and lots of other data providers. And there's a few drivers that are going to drive that up and to the right as well with our rents and our property prices. Tell me right now in the chat, let me know what is holding us back. What's going on? Why aren't we all out there buying every property we can get our teeth into or get our hands on? Tell me in the chat what's going on. What's holding us back, folks? Because I want to talk about that in a minute. What's holding you back? What's holding you back? What's holding the average Aussie back right now? Let me know in the chat while I catch up on my coffee. Yeah, that's right. Luke, servicing. Yep. Mick, rates and banks. You're dead right, folks. Right? It's about the money. Show me the money, right? Can I get money? And by and large, the average Aussie, the cost of living has gone up with inflation and other bits and pieces. It's a bit tough out there for the average Aussie, on a quite a large mortgage, and cost of food, cost of petrol, cost of whatever has gone up. Challenging to get there. Yes, that's right, Brad. Brad is our resident expert lender, and he knows all about this personally. Each day, he's trying to get you and me lending money to buy these amazing opportunities. So money's our problem. Money's and some cash flow. You're dead right. Shantanu. Hopefully I got that right. If I didn't, I apologize. Shantanu. The cost of ownership. If you own a property and let's say it's negative cash flow. Negative cash flow. There's value in the future. But there you go. As we go. So anyway, what can we do about that? What is the future holding? Well, let's have a look at maybe some forecasts of some bits and pieces here. The ability the ability for us to afford lending or afford housing is forecast to improve. So that going down means it's improving. But have a look at the sharp decline. So the up on this chart is it getting worse? And then on the other side, it's improving. What does that mean? What does the future hold? Well, it's an interesting one because right now we're at this precipice of the interest rate or the cash rate conversation. Everyone's holding their breath, folks. Well, anyone that I run around with when it comes to the world of property and property investing, but here's what every single forecaster. It's interesting. I checked out what Oxford Economics does is they aggregate. They grab, I think it was like 50 or 60 forecasters and economists, and they aggregate the future opinions. Now, no one knows what the future holds. However, their forecast is somewhere in 2025, interest rates or the cash rate will go down, right? And probably down a good full 1.5%. Now, if hopefully the banks pass it on as quick as they can, they put it up very fast, but they don't pass it on very fast, do they, when it comes to rate reductions? So what will that do? What's that going to do? Why are the forecasters saying the future, when that interest rate or the cash rate drops, and it will? Now, there are some conversations going on. The RBA might put it up, 0.15% before the end of the year just to kick us all in the guts, and then drop it next year. Even if that does happen, this does not change. It doesn't change the trajectory of where we're going, folks. Why? Why doesn't it change the trajectory? Well, very simply, here's the drill. Australia has the lowest vacancy rates, which means there's nothing to damn well rent anywhere. And try and rent something good as we go along. I've got a client who just now furnished one of her properties up in Brisbane, furnished house. Unfurnished, that house was renting for $1,100 a week. She furnished the house. She's in this game. She does furniture packaging and staging. We're chatting to her about doing some stuff with us, actually. She furnished a house, and now it's renting, or she got a quote from the agent that they could get her $3,000 a week. Folks, mind-blowing. One of my properties up in Brisbane, I furnished just recently. The normal rent's $1,000. My furnished rent is $1,850 a week. Cray time. Anyway, there you go. So vacancy rate's low. Is that going to improve? A vacancy rate's going to improve? No, they're not, because of population. The big one, team, the big one is the lack of properties being completed in Australia is not going to be fixed. And it's going to increase, which is making things worse. So for you, for me, when it comes to this conversation, team, up and to the right, for us, go back here, up and to the right, is what's going to happen. Can we get access to that, right? And where are we now and where will we be is a matter of us getting access to some cash, some dollars, and participating, jumping on a deal or two. So there you go. Anyway, folks, today, really, I love diving into some of this data because it's always an interesting one, right? Underlying our feelings about what's going on, or even sometimes, our budgets and bits and pieces, we might feel, things are struggling. However, underlying that, the underlying data, the underlying market, the information right there in front of us shows that the future has pressures upwards. We've talked about this for yonks anyway. Upwards pressures, and pretty significant upward pressure that, for us as property investors is going to be positive. How do we get involved? Are you sitting there right now worried about it and you want to make sure you participate? For those who are in our coaching and property program, then make sure you reach out to your coach and your advisors and make sure you maximize, you turn every stone. Don't leave any stone unturned if you're in the portfolio building stage, which is the acquisition stage. Anyway, there you go. Anyway, that's it from me, folks. Great to have you on today. Yeah, absolutely, Luke. I think we'd be all happy if they passed on a little cheeky 1% reduction in our interest rates. Well, imagine this. Imagine the interest rates go down 1% and your rents go up $100. I think we're all going to be pretty happy about that. And that's really the trajectory that's going to happen over the next 2 years, as we go. So there you go. All right, folks. That's it for me today. Happy days. Thanks for joining me. Great to have you here. As always, join me tomorrow maybe if you're around. Actually, Finance Friday. Brad from the finance team will be talking all things finance tomorrow. So maybe he can find a few ways for us to unlock some hidden opportunities or hidden possibilities when it comes to our servicing and borrowing. Make sure you tune in for that one. All right, folks, that's it from me. Take care. Bye for now.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.